It seems that the figure that really drove home the size and scope of the problem was when we reached 1.75 trillion in total student debt, more than car loans and other personal finance expenditures. Are we making any headway yet, Laurel, or is it still getting worse?
Hmm. So the total, and John, thank you so much for having me and diving right into the numbers because they are staggering, and the problem is getting worse, and it's going to continue to get worse in terms of the total amount of total outstanding student debt. So, as some of your audience, some of your viewers and your audience members may be aware that we have been in a 2.5 year moratorium on student loan payments, which is really the first time in the history of the United States where we've had a 2.5 year pause on payments due on federal student loans. And the intent behind that was good, in that 98 over 90% of borrowers say that they're actually not prepared to enter back into repayment. But the challenge is that we've actually kicked the can now. The average pay down time is about 17 to 20 years. Now we have 2.5 years inserted as a delay. And so both the total amount of student debt continues to grow dramatically, as well as now the total lifetime that it takes to pay down debt. I think a very well-intentioned program has also, unfortunately, really elongated that journey for Americans and for those with student debt.
Why is student debt so bad, aside from the obvious and the burden it places on people? But what other financial areas does it impact?
So, I would say I think that student debt, because I've had, my mom and I together have shared about $200,000 in student debt, and she was a social worker, made $24,000 a year. And so I think student debt is actually the gateway to, and the data show that education is the gateway to increasing your earning potential. And the data is very clear about that. I think the reason that student debt has become quote unquote bad is largely, as you think about $1.7 trillion, there isn't an industry around the $1.7 trillion to really empower those who've decided to achieve socioeconomic mobility, to become educated and members of our society. Although I think education can come in many different shapes and forms, it's just been analog, right? So the industry is saying, hey, if you want to figure out how to change your federal repayment plan, contact your servicer via fax machine. It's 2022. We need to reach users with modern experiences that are expected today with our smartphones. 7 out of 10 graduating with student debt have never even seen a fax machine before. Like, they actually don't even know what a fax machine is. And so I think it's this lack of innovation and lack of tooling and lack of education about student debt and how to better manage and pay it down that is what is bad. I actually don't think it's the student debt in and of itself, because the reality is the alternative is not going to school, not becoming educated in the traditional system. And so I really think that's where, as an industry, we failed the borrower, with just lack of counsel and kind of ill equipping those who have their first financial life event. You're 18 to 22, it's your first financial life event. You're graduating with, the data is 38,000, but in reality, we see that most of the users we serve, it's well over $60,000 in debt, whether they're making $21,000 a year or whether they're making, into the six figures. So it does affect. I'm sorry, it was a long, it was a kind of a visceral reaction of, I think education is good, and the data show that it's really important to lifetime earnings. I think the experience is bad. And because the experience is bad, 61% say that they've put off retirement because of their student debt. 81% have reported that it's delayed kind of any other wealth accumulating life event. And 3 out of 5 younger persons say it's way higher priority to pay off their student debt than it is to save for retirement. But if we can equip borrowers through modern experiences and technology, we can actually graduate our conversation into savings and retirement savings.
Understood. We were speaking with the ARA's Nevin before the podcast, and he raised the common criticism that company matching and forgiveness programs unfairly come at the expense of those who were more maybe frugal in their education choices. Is that criticism legit?
I think the criticism is born from personal experience. And so I think that that perception is important. And if we look at the data, most of the time I hear that argument. I paid for schooling myself and I got 2 jobs and I put myself through school. That was, I'm going to be, I'm going to be, that was possible 30 years ago, right? It may have even been possible 20 years ago. But the cost of education has actually increased 1,375% since 1978. And the cost of education has outstripped inflation by a factor of 4x. And so, I had jobs going through school. I had a lot of them, from being a cashier at Albertsons to, many other jobs that college students get. I was also a TA for Spanish and history. But it's really very impractical, even for families who are saving, in 529 savings plans, to expect it's basically a mortgage to pay for that in cash. It's an outdated perception based on a completely different reference point of the cost of education. So I thank you for surfacing that, because, 7 out of 10 graduating with student debt, but also those over the age of 60 have the highest outstanding balance, right? Isn't that so? Because they're taking on Parent Plus loans and they're co-signing. So these are not individuals who are entitled or want to make things just take the easy road. These are individuals who are committed to the power of education or finding a way to get there because they don't have the cash in their pocket to cover the full expense.
You've touched on this a little bit, and I just wanted to expand, but you have an interesting personal experience with student debt. And if we're not mistaken, it was a factor in launching Future Fuel. What is it?
Yes, so thank you for asking. I think my experience, because I've personally lived the problem, and I remember standing in the Google cafeteria. I was leading a global business unit for Google, and I was going to school at MIT, which are both is such an honor and a privilege to be part of both of those institutions. And I came from very small town in Texas, and mentioned my mom and my mom's earnings, and I just couldn't believe that as a product and technology operator and executive, I just couldn't believe how bad the experience was of managing and kind of tackling how to best manage my student debt. It's really confusing. Most users have 4 to 7 student loans. There are fabulous federal government programs available. Nobody knows about them. It takes like a PhD in math to figure out which one you should be in. And then we're using fax machines to enroll, right? I mean, there's so many problems in that journey and user experience. I just couldn't believe that we hadn't applied best in class out of category like Honey and Acorns and TurboTax to this problem. So I created Future Fuel, and really my vision was to digitize the experience and then meet users where they work, where they bank, and where they experience financial services. So really as a workplace benefit, my vision was to create a new normal where every worker in America, just like they can take advantage of 401k and retirement savings or tuition reimbursement, can receive student debt repayment as a tax advantage benefit like any other benefit in the stack. Unfortunately, that has come to fruition since COVID, which is really exciting, and we have more exciting regulatory changes that we as an industry are anticipating as well.
So how does Future Fuel work, and how can advisors use it to grow their business? I mean, is fintech at this point the answer?
Ooh, well, I think fintech is a really important answer. And fintech actually makes it easy for advisors, for record keepers, retirement providers, wealth managers. And we make it easy via embedded finance. So we as Future Fuel have created the most comprehensive platform strategy that really addresses 100% of the total addressable market of those who have student debt. And you want to think about student debt as age and wage agnostic. So it's the full spectrum from the stockroom to the boardroom. It's a really complicated form of debt to optimize. And so what we enable advisors to do is roll out an innovative digital experience that whether the person is financially insecure or the resilient, enables that user, that employee, that participant to onboard. And the data show we quickly assess the goals of the user and the financial health and wellness of that user, as well as the metadata on their student debt. It takes the average user about a minute and a half to onboard. And in about a minute and a half after onboarding, we guide the user into the next best action on their student debt. The average user, and in particular as the moratorium ends and 47 million Americans re-enter into repayment, one of the primary focus areas for us is student debt savings. And the average user can save $326, $326 a month through our, pardon me, I thought I had some bandwidth issues there for a moment. And so for the advisor, the ability to serve a plan sponsor, and the plan sponsor says, hey, diversity, equity, and inclusion is important to me. How are you as an advisor meeting my population where they are today? Not just the 1%, but the other 99% in my workplace. How are you adding value to 100% of my population, not just those who are already really attractive from an assets under management perspective? And so we do the heavy lifting so that the advisor can deliver an elegant solution that provides significant student debt savings, which is not only today we've saved about $70 million and 3,500 years off of student debt.
Yeah, that's great.
It's fantastic. And you think about those savings can be redirected. We are unblocking savings and retirement savings. We are creating and enabling those who maybe have been on the sidelines in retirement savings and planning to actually get in the game. And so we make it easy for advisors to deploy us for plan sponsors and for plan participants.
I think everybody likes that. You make it easy. That's great. So Laurel Taylor, that's exactly what we needed. Thank you so much for joining us. I do appreciate it.
John, thank you for having me. It was a pleasure.